That's $1 million question. Well, we've got Doge, we've got all these people coming in, we've got Elon Musk, we've got Trump, and everybody is super euphoric about what's going to happen. So I would use something called dollar cost averaging. If you've got some money you want to put in the market,
What sectors do you think are going to do the best? What can we expect in 2025 in the stock market?
yeah, that's $1 million question. Well, what I didn't expect was 29% in 2024, right? It was a huge year. It was an election year, which historically is very volatile. People don't know what's going to be going on. And when you look at what has happened since November in the stock market, it's been, and I've been in the market since 1998. I've never seen anything like this. Now, people thought, and maybe Trump gets in, and then we called it the Trump rally. Some things were rallying up, and usually there's a saying: "Buy on the rumor, sell on the news." So what I thought was going to happen, you see this little bit of a run up into the election. Trump gets elected. You have a couple of days of euphoria, then things kind of sell off, and people start worrying about things again. Well, that hasn't happened. We're right now at the end of the year. We've seen a little bit of a pullback, but largely we've just seen rotation where you might see tech do great, and then the market doesn't crash. It just shifts to industrials, and then it just shifts to healthcare. So the resiliency of this market, I think, based off of what's going to be happening with the new administration, in my view, has been shocking. So what you always want to think about is, you're asking me about 2025. Well, 2024, we just did 30%. Historically, over a long period of time, the S&P averages 9.5 to 10%. So that's got to get you a little bit worried when you see something rally. The year before was actually a pretty good year. So now you're looking at like 40% in 2 years. Does that necessarily mean the stock market's going to crash? No, it doesn't. But what I would expect is a lot more volatility. So there's a lot of things, there's a lot of heavy expectations on this new administration. We've got Doge, we've got all these people coming in, we've got Elon Musk, we've got Trump, and everybody is super euphoric about what's going to happen. I'm optimistic, but I'm also cautiously optimistic, and I don't expect all these things to happen overnight. So what I would say is, I believe the market will do well. I don't think it's going to be straight up like it was before. And so I would use something called dollar cost averaging. If you've got some money you want to put in the market, don't dump it all in right away. Use some of these pullbacks, use some of the scare, use some of the fear, use some of the disappointments, which we're bound to get with some of the new administration, like we would with everywhere. Use those as opportunities to buy, but don't go all in after we've had this huge run.
What sectors do you think are going to do the best?
I think technology is going to continue to lead, because technology is what is creating, technology is a double-edged sword. It's creating the increased productivity, meaning efficiency for businesses. At the end of the day, when we're buying stocks, what we're doing is we're buying the future profits of a company. And the more consistent, the faster growing, the more reliable those profits are, the more that stock is going to continue to go up. And so when you look at technology, there's no industry that I know. Well, let's take one sector of technology, cybersecurity. Well, everything's going to the cloud. Everything's going to AI. If you were a large corporation or small corporation, like my businesses, your businesses, no matter how bad the economy is, are you going to cut your budget for cybersecurity? Are you going to tell your customers, hey, things aren't quite good. We're gonna make your data a little bit riskier? Of course not. So there's going to be increased investment there. Artificial intelligence, other things that are going to increase productivity to make companies more efficient and more profitable are going to continue to do well. The downside of that, obviously, is there's going to be less people needed to be able to create those jobs. So technology, I believe, is the number one sector out there. Everything is going to be AI driven, robotics driven. That's where the economy in the future is going. That's been really, that picture has been painted for the last 5 to 6 years, and that's where you're seeing the money start to go. Now, you look at other areas where it's almost like when you think about the gold rush back in California, you could invest in the gold, in the mine itself, or you could invest in the picks and shovels, the things that they're going to be out there to be able to work and create and mine that gold. So you think about energy, for example. Well, all this data, like we saw with Bitcoin mining and everything, it takes a lot of data and power and energy to be able to power this new economy, which is why you've seen in the last year to 2 years, utility companies, which are traditionally they say utilities are what widows and orphans buy, right? Because they're stodgy companies. They don't grow really fast. They're what puts the lights on, literally. They pay good dividends historically. So you look at those as more conservative investments, but we've seen utility companies go up 50, 60, 70% for precisely the reason I'm talking about, the need to be able to power these supercomputers and generators and everything to be able to create this new economy. So that's another way that I would look at playing it. What I'd be a little bit more leery of when we were talking about this is areas like healthcare. There's so many questions around that. The healthcare system is clearly broken. We don't know what that's going to look at. There's not a lot of predictability. And the way Wall Street prices stocks is when there's a high degree of uncertainty, there needs to be a high discount associated with it. So the more certainty, the more people are willing to pay up for it. There's a pretty high degree of certainty that Apple's going to be around in a few years. Google's going to be around in a few years. But what does United Healthcare look like? Not mentioning everything that just went on with that company. Pfizer. What do those companies look like with the new administration? We see RFK talking about some different things. We know the system is broken, clearly. We don't believe in it. We don't trust it. We don't think it's efficient. That's probably an area I would be avoiding. I would be heavy in technology. I would be heavy in energy. I think some of the real estate investment trusts that own the right type of property are another area. So another thing is, if you don't have money to buy a home or invest in commercial real estate, sometimes the cheapest place to buy real estate is actually on Wall Street. You can buy something that's called a real estate investment trust that owns self-storage units, that owns single-family homes, that owns raw land, that owns commercial units, whatever it is you want to buy, and you get a lot of the same benefits, depreciation, you get income that comes from them. So some real estate investment trusts have been really beaten up over the last year and a half. Why? Because traditionally, as interest rates go up, areas that pay you a dividend or income, like real estate investment trust, or as interest rates go up, it's not easy to borrow to buy real estate, tend to come down. So some of those areas have pulled back, but I think there's going to be a stabilization. I do believe in real estate. So real estate investment trusts are another area that I'd be looking at.
Back to the RFK thing. I'm
Yeah.
glad you brought that up because I wanted to specifically ask that. He's got a lot of plans
Yeah.
about, kind of going after big pharma,
Yeah.
going after the food companies.
Yeah.
But there's got to be a counter to that. We can't just get
Yeah.
rid of all of that. So
Yeah.
is there anything in healthcare or in food or that we should be looking at? One thing that comes to my mind is psychedelics.
Yeah. Yeah.
Psychedelics just keeps getting more and more popular. More and more people are hearing about it and figuring out all the positive aspects of going through some psychedelic therapy. I know that I don't know. I've heard rumors of publicly traded companies kind of rising up
Yeah.
within that space. Are you tracking any of that at all? Or
Yeah, look, I mean, the thing to be a little bit leery of with a lot of these companies, most of them don't have earnings yet, right? So they're investing in R&D, which in itself isn't a bad thing, right? Because as you mentioned, it's been kind of like a backdoor type of thing, psychedelics. It hasn't hit mainstream yet. I mean, it was the same thing with alcohol back before Prohibition, right before Budweiser and Coors became these big stocks. So I do think there's some validity to your thinking. I do think that those things could get a light shown on them. And when you start looking at some of the independent research out there, you've talked about it on your show a lot with different people. There's actually a lot of positives that surround it, more so than what's happening with barbiturates and all these other things that are out there that are harming people. So I think what I would say about those types of investments, the same thing I talk about crypto and all these other areas that are a lot more speculative, that had a lot of degree of uncertainty with them, I don't think you should avoid them, because if you're not participating in those are the areas which we call them 10 baggers, right? Those could be the things that do a 10x return, 20x, 30x return. So you miss out on them because of fear. What I would say is, though, those are the areas to maybe sprinkle a little bit of money in. So if it goes down and you lose something, it's okay. And I would also say, don't try to pick one stock. Spread it out across 10 to 20 stocks. This is like what the big boys do. Andreessen Horowitz, the private equity companies, when they're investing in small private companies, They invest over 100, 200 companies. Why? Because they know 50, 60% of them are going to shit the bed. They're going to go to zero, but the rest, or one or two or three of them, could be that home run that more than makes up for it. So I would say is start doing the research. I think it's promising. Not too long ago, we saw something similar a few years ago with marijuana stocks. Some of the psychedelics actually had big runs during that period of time. I do think this administration, though, could create a narrative that actually supports a thesis for those types of things. And one thing I've learned, Shawn, for being in the market for over 26 years, I'm trained to be a fundamental analyst, but what I've realized, and I also have a degree in psychology, the psychology of people sometimes is a lot more important than what the actual fundamental numbers believe. And so if somebody believes in something and enough people believe in something, the power for those stocks to skyrocket well ahead of what the valuation model is going to show is going to happen. So I do think those are areas people should be looking at this year.
It does seem like there's a big wave of people that a lot more interested in homeopathy type care and natural medicines. And so, I was just curious. And I'm sure there's tons of companies, only probably a couple will survive. I mean, is that... No matter where you're watching Shawn Ryan Show from, if you get anything out of this, please like, comment, subscribe, and most importantly, share this everywhere you possibly can. And if you're feeling extra generous, please leave us a review on Apple and Spotify podcasts.